Yo, thank you for joining us for our May monthly market update. We're going over a couple of things today: affordability concerns, which are always top of mind, mortgage rates, which always dominate the news, and Gen Z. We'll be talking about and to Gen Z. And we've been involved with Gen Z a lot lately and helping them find space. We've had some interns, we have family. So that'll be, I think, a good segment, a good part of our segment. Our goal always is to provide general information that connects with what's happening locally. And you can follow us on social media to get those deeper insights, especially on a local basis. And of course, if you're ready to buy or sell, you'll be given a thorough analysis, or we'll give you that thorough analysis of what's happening and where you're positioned in the process.
Nice. Affordability is a major concern for many and has been for a couple years now. According to the National Association of Realtors Housing Affordability Index, homes are less affordable than they have been in decades due to rising home prices and higher mortgage rates. One way some builders are hoping to combat the higher prices is by constructing smaller homes. In 2023, 38% of builders reported building smaller homes, and over a quarter plan to continue this trend. Still not enough of a shift, but at least it helps provide a little more affordability.
The average square footage of new single family homes has decreased by 10% since 2018, which makes home ownership a little more accessible. Like on a 2,000 square foot home, for example, at $300 a square foot, with that 10% size reduction, you're talking about $60,000 less on that home. Now, let's touch on the impact of mortgage rates. We've been talking about rates every month for the past couple of years. Mortgage rates, as we know, are influenced by various factors, including inflation, which we hear about all the time, and labor market conditions, which right now across the country are pretty good. As we saw last month, and we'll probably see for the foreseeable future, there's a lot of up and down in mortgage rates due to these influences. The Federal Reserve's jobs and their actions, particularly their decisions on interest rates, play a significant role in this. As inflation was rising, they started to increase the federal fund rate, and inflation then started to come down. But as the last couple of readings came in, just a touch higher than expected, the Fed decided, hold on, wait a minute, right? We don't want to repeat history. We don't want this to happen again, right? So they're going to buy a little bit more time to make sure that they're really seeing those consistent trends of a slowing in the economy, right? That's when we can start seeing some relief. But that's a big reason why they're taking their time. But it also means that the economy is strong right now, right? So we have to sort of take that into consideration. You have higher interest rates, but also a better or stronger economy too right now.
And if you look at what Jerome Powell said coming out of last week's meeting, he emphasized the importance of being data driven. He stated, "My personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that." This approach underscores their focus on monitoring all economic drivers such as inflation and employment to make informed decisions. So no one can predict exactly what will happen.
That's right. According to the CME group, there's a 69.6% chance that the Fed will cut rates at the September meeting. That means nothing to me, and it should mean nothing to you. Other than that, no one knows.
The experts from Fannie Mae, MBA, and NAR change their projections every quarter. What we want to show, though, is what happens when rates do drop.
You're talking about demand-based on-rate environment like this graph. It's a strong analysis of what's happening with the 30-year fixed mortgage rate. You can see that white line coming across your screen, going back to the beginning of the year. That's the daily mortgage rates. Notice how demand changes based on where rates are. Bottom line, when rates come down, demand increases, which means that prices go up, right? As rates tick up, demand starts to weaken. Bottom line again with this is that it is not a good idea to wait for mortgage rates to come down. If you can make it work, get in, take advantage of the appreciation, and if and when rates drop, then you can take advantage then.
All right, now let's talk about Gen Z, those that were born between 1997 and 2012, and their concerns about homeownership. Many of these young people are worried about whether they'll be able to buy a home given this current market conditions. And as a parent of a Gen Zer myself, I understand this concern deeply. My son just graduated from college, and I was up talking to him and his friends about what's next. But because they think home ownership is unattainable, it wasn't even what they were thinking about. It wasn't what was part of the conversation. But I was there to tell them that the good news is that Gen Z does have multiple paths to home ownerships, giving them creative ideas to get their foot into the game. And recent studies show that about 30% of 25-year-olds own their own homes, which is slightly ahead of previous generations at the same age. So while it is a challenge, they're making it happen. They may represent a small portion of the market right now, but their numbers will grow over the next few years. So it's crucial to educate and support this generation in understanding how they can achieve home ownership.
There are several steps that Gen Zers can take to prepare to buy in a home. Right? First thing is really understanding that home buying or financial literacy, if you will, right? That's key. Understanding how mortgages work and exploring different financing options can make a significant difference. Being open to different types of homes, right? Maybe they're smaller, maybe they have room to grow, and different ownership structures, right? Can also help Gen Zers enter the market. Plus, there are a number of resources available to help with down payments and closing costs, like our down payment resource website. We once again partnered with our preferred lender, Altera Home Loans, to help a Gen Z couple and our friends purchase their first home in San Bernardino. Every situation is unique, but our team makes it happen, especially with our Next Door program, which gives our everyday heroes, whether you're a Gen Zer or not, and those heroes are healthcare professionals, doesn't matter where, as long as you're in that profession, whether it's for vets or humans, right? Education professionals, and again, it doesn't matter what level, as long as you're working in that school building, law enforcement, first responders, and veterans. They get invaluable resources through that program.
All right, folks, that's a wrap for the monthly report. If you want to know more, whether you're buying, selling, or have questions about real estate, connect with us. We'll be your guide from start to finish. Thank you for tuning in to this update. We are Carrillo Group CANY, where we do real estate with purpose.
Peace.